All right, so that's being recorded. Okay.
Okay, perfect. Perfect. Yeah.
Let's see. All right, folks. I thought I'd record this session to quickly go over a strategic consideration project put together by one of our Analyst Prep student who I have here with us, Neil, who is a freshman in college. And this presentation gives you insight into the level of work that our students are learning, but more importantly, what senior level investment bankers professionals are recommending to corporate clients like a Walmart. So Neil performed valuation, built an entire model, strategic consideration analysis, and his recommendation, illustrated right here on my screen, under the strategic consideration category, Walmart debt to equity ratio, okay, this is looking at the capital structure of the company, looking at the balance sheet. Their debt to equity ratio is 14% compared to 22% on the industry. So the industry average is 22% debt. Walmart right now is 14%. And he also suggests that Walmart should issue a $44.1 billion debt issuance to align Walmart debt capitalization ratio with its industry. In addition to that, take the proceeds from issuing debt to improve the company's margins and buy back share. And in addition to that, reinvest profits in the business, most effective strategy to strengthen the company's financial health, create more prospect for future strategic enhancement. Ladies and gentlemen, this is the type of analysis that normally a vice president, director, or managing director would be communicating to the CEO of a strategic client like a Walmart. And behind that recommendation is a wide range of analysis, very technical, that he also performed using data to back up his claim. And here's what that looks like, right? Company profile, industry overview, annotated stock chart, institutional ownership, valuation, football field. Here is the comparable company analysis table and where he found the information. Debt, 44.4% to be more exact. And then the industry peer group is anywhere between 21 and 22.5%. This is where he got that information. And in addition to that, here's his pro forma analysis of issuing $44 billion worth of debt. Here it is on a standalone basis. They currently have $6.2 billion. And after issuing the debt, there it is. It will become 104. So again, this is very technical, very high level. And this is what our students are learning in the Analyst Prep program, where you're not going to be able to find or do anywhere else. I usually tell our students that by the time you complete our Analyst Prep program, you'll know more than your finance professors. You'll know more than your peers, and you can impress your supervisors, the interviewer, if you have an upcoming interview for an internship or a full-time offer, and you become a highly productive member of that team. You're more productive and you can contribute more. So with that being said, Neil, what was the most difficult and challenging part of this project, which you created from scratch? So tell us a little bit more about what was the hardest part.
Okay, there were a couple of hard parts. It's hard to pinpoint to just one. I mean, it's a big project, and you're advising a client like Walmart, who's a multi-billion-dollar retailer and one of the biggest retailers. So, one of the biggest problem was, and since Walmart is such a big company, I had to analyze their business model from scratch, and there I performed an in-depth analysis. I had to read a couple of SEC filings, mostly 10Ks and 10Qs, mostly 10Ks from 3, 4 years back to understand, make the best use of their cash. Or what is the debt to EBITDA ratio? I mean, if I'm going to issue debt, I should know if the company is in financial distress, which in Walmart's case it was not. It's a perfectly healthy company in terms of debt. It has a good debt over EBITDA ratio, so it could service debt in the long term. But the hardest part, since Walmart is so big, there are a lot of segments of the companies. For example, there's Walmart in North America, there's Walmart International, and there's Sam's Club, which is mostly for groceries. So in order to fit your assumptions and your consideration into a big corporate giant like Walmart,
Mm-hmm.
I faced a lot of difficulties in pinpointing those exact problems, I could say, about its business model. And
Mm-hmm.
since that required a lot of due diligence on my part, it kind of threw me away for a bit, because once you consume so much knowledge about the company, and
Yeah.
with the and as Mr. Romero knows, uh, once you start modeling, when you're building a 10-year financial model, it's the numbers that make you go a bit. They just throw you off guard for a bit, but you just recollect yourself. You come back at it, and you get the job done.
Okay.
But yeah, so the biggest problem I think I faced was different type of alternatives I had to suggest Walmart's CEO. I mean, Walmart, for example, guys, is a restructuring story in the present right now. They're already building new stores. They have a $3 billion project development currently, and they're building 3 to 4 super centers in North America, and mostly in Montreal. And they're innovating new technology as well to compete with their rivals. So, and you also have to be one more difficult thing is you also have to be familiar with the news. I
Yeah.
mean, in those 15 days, there was not one day where I went when I and I woke up at 9:15, 15 minutes before the market starts. I just Google everything about Walmart. What the CEO has planned. I
Yeah.
mean, it requires a lot of looking into, and a lot of
Yeah.
due diligence. So I think and to be honest, it gets to you at some point.
Yeah.
So that, yeah, I think, yeah, those
Mm-hmm.
were a couple of major difficulties I faced
Yeah.
in this project.
Good, good, good. So just
Okay.
to summarize it, definitely due diligence. That could be a challenge.
Yeah.
Number two,
Yeah.
the financial modeling part, which
Okay.
I even have your model right here.
Okay.
For those of you
Yeah.
that are watching, just take a look at this. Cover page, 3 statement model he was able to create. And normally you're usually thought 5 years model. Here, Romero mentioned we teach 10-year models to really capture a decade of cash flows on companies that are mature, companies that are profitable, generating free cash flow so that we can perform valuation. Here's his DCF analysis. So obviously modeling is very technical and is one of the major challenges that first time finance professionals may find or encounter as a difficulty part. But I see everything that you've been able to do here, which is great. And then you recently just mentioned that Walmart is a restructuring story, which,
Yep.
yes, you're
Yep.
right. They've been digitizing the business a lot more just to be more
Okay.
competitive. And of course, you have the major competitor, which is Amazon. And,
Yeah.
and obviously, they've been doing strategic planning and execution on their plans to digitize the business, become more competitive, increase their margins. So I think this is a great project for you to have as a foundation to continue to build and improve your finance career and be on your way to becoming a finance professional. Now, here's another question that I think some of our viewers might find interesting. Compare yourself to when you first applied to the program, you first interviewed with me. Compare yourself then, which was probably 4 or 5 months ago, to where you're at today. What would you say are 3 major difference from what you did not know to what you know today? What was that experience like, and what are the 3 main points or skill set that you've developed in the program?
Okay. It would be hard to pinpoint three because there's obviously the number is much bigger than three. And so I started this program when I was just finishing up my freshman years of first semester around. And coming into college and a university, I always had keen interest in finance. And but before joining the program, I asked myself, how much do I really know? And people might just think that it's all about stocks going up and down and market and everything. But newsflash, guys, it's so much more than that. And I felt like I was lacking a lot of of things, and then if I wanted to break into the financial industry and be a professional at a higher level, uh, I knew I had to start early, and there were a lot of things which I was nowhere even close to knowing. So okay, so the first one is definitely um, building models, I could say, but most importantly, doing company analysis and learning about the corporate finance basics. I mean, so you just see a company, pick any company, Apple or something, and you just look at the company from its products and everything. But once you dive into those nasty SEC filings, you just see it becomes more and more complicated. There's a lot of, for example, from shareholder votes to proxy contests and a lot of different aspects of corporate finance which you have to know if you want to get into the industry. And I think that is one of the biggest uptick for me, where I got to learn more about corporate finance and more about the industries in general. And uh, the most important thing would be I got to know more about what do investment bankers and analysts and traders at Wall Street actually do
Yeah.
when it comes to making money.
Yeah.
So yeah, the first thing was definitely that, and secondly, uh, I remember this moment distinctly. It's my freshman year, and I was taking this accounting and finance course where there were balance sheet statements and everything, and I was just reading them from scratch, and even then I wasn't able to understand the real life application because I actually have not seen external factors affect those line items on your financial statements. I mean, people in their sophomore or like third junior year, they just look at like in their business courses, like they look at their statements and they just take it as they are. I mean, no, I mean that's not how we do it. For example, with my case in Walmart, for example, SG&A, which is selling general and administrative expenses. People just might think it's about employees and costs and everything, but they never consider what affects it and how you can control it and or how you can improve it. I mean, these are the questions companies want to know if they want to improve their margins.
Mm-hmm.
And so these are the questions as an investment banker or an investment banking analyst and as most importantly as a professional finance professional, you should know this, and this was the part that helped me the most.
Mm-hmm.
And the third one being this was probably the most not satisfying, I must say, but it was the most eye-opening thing as a student I could receive, was that folks, I mean, this is not just in terms of knowledge and experience, but it is literally you doing all of this from scratch. It's literally you being a professional. I mean, with Mr. Romero, I had strict deadlines, and if I even missed one, like even by a bit, I wouldn't be here, to be honest. So it's a professional job, guys. I mean, you just have to be on time. You have to take time. You have to put in the work.
Yeah.
And Romero mentoring actually taught me how to manage my school and how to manage my work.
Yeah.
Now I work 10 to 15 hours a day, which is probably more than most people I know on my campus. And out of those 10 hours, five or six go to Romero mentoring and the work I've been doing so far along. So
Yeah.
time management skills and professionalism is a big add-on, and I think most of you won't be able to get a grasp on it if you don't take the next step forward to
Mm-hmm.
your career.
Yeah.
Yeah.
No, I see the insights and more importantly, your growth, your development from day one to seeing what you'll be able to do now.
Yep.
It's quite remarkable. But all the credit goes to you because you did the work, right? I just built the foundation, provided the content, and you executed. So you're the one doing the journey. So a lot of the credit goes to you. So you should definitely congratulate yourself. You should definitely be proud of yourself because this is not an easy program. And like you're seeing, being able to create these models from scratch, being able to create the presentation, being a full-time student, doing our program, managing extracurricular, having a plan, and developing time management skills. It's also extremely important. And these are the things, obviously, that I'm trying to pass down to students like yourself so that you can become a lot more productive and you can maximize your time and not waste it and be able to do good things, not just for yourself, but also for those around you, for society, and become a more productive member of our communities. All right, buddy. I just want to thank you for taking the time to present this. And for those of you that are watching, I hope you found this insightful. I hope you can learn something from Neil's story. And if you're interested, check out our website. Go to romeromentoring.com, apply to the Analyst Prep program, and also don't forget to watch us on our YouTube channel. Thank you. Take care.